For about a year and a half now, every day it's trade deal on, trade deal off. Will we get a deal? Maybe we won't. I mean, it feels like Groundhog Day. How do we invest through it?
You know, when we're talking to our clients, Brian, we try to tell them that the daily market movement is driven by these headlines. So what they want to try to do is not ignore headlines because, like I said, it does drive market activity, but really look through the headlines where longer-term investors try to find some opportunities with the volatility you see in the market to add to your portfolio. So we've been doing that. We've been adding to some of our names like Apple, Coca-Cola, actually Lennar as well. That was a new name we added earlier in the year, and we actually saw really strong housing numbers this week, and we hit cycle highs on permits, so there's an opportunity to add. So you can trim some names that maybe are having some issues, but find opportunities with this and look longer term. Don't trade just on the headlines.
So what do we trade on then? I mean, are earnings enough right now, given all these macro headlines that are kind of, I don't want to say in the backdrop, because they seem to be in the forefront?
No, you're absolutely right. I mean, you want to look at earnings. Obviously, we're right in the heart of earnings season, so that's going to drive individual stock movements. I mean, we saw that with the retail stocks already, right? With Home Depot, with Kohl's, we saw the pullback that we saw in those names, and then the upside in some of the other names like Target and TJX. So you want to pay attention to that. But look, you got to pay attention to fundamentals as well. And we're starting to see those turn around. There's been so many uncertainties this year, whether it's trade, whether it's Brexit. Germany is doing better. PMIs, manufacturing. I mean, we can rattle off all these economic numbers that people have been concerned about, but seem to be turning around just a little bit. So focus on those fundamentals. See if they're going to start to boost the market besides just the headlines on trade.
Have you been happy with the fundamentals that you have seen so far, Victoria?
You know, we've really had this split between hard data and soft data, and we were kind of debating which one is going to make the move. At some point, the two have to come back together. It appears that, the hard data is doing pretty well. It's holding its own there, and the soft data is starting to come up and meet with that. For us, that's a positive for the markets going forward. So we like where the data is heading. We have to pay attention. Obviously, the consumer is strong. Everyone's watching the retail earnings this week because of that, and even the discretionary earnings have done really well. So watch the consumer, but the fundamentals are doing well and giving us some support for the market. So we think that's going to continue.
So bottom line is you believe that in 3 months and 6 months, maybe 12 months, Victoria, that the overall major market averages here in the United States will be higher than they are right now?
We do think the averages will be higher. That's not to say there's not going to be volatility, that there's not going to be some pullbacks. Obviously, as we go into an election year, there's going to be a lot of volatility. With the trade issues, that's going to change, like we said, on a daily basis, moving the markets. But we think longer term, we're not looking at a recession coming in the next 6, 9, 12 months. We could see a slowdown, and that's okay. Like I said, use that as an opportunity for your portfolio. Don't be afraid of that, but take that longer term perspective, and we think the markets will move higher.